Introducing Recyclical, making lithium-ion last forever. Recyclical's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclical Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt 2AM. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. He's also a portfolio manager and financial advisor in Edmonton. His website, MacBethMcLeodPartners.com. You can find him on Twitter at HMacBE. Welcome back to the show, Hilliard.
Always a pleasure to be on the show.
Hilliard, the Canadian real estate market, kind of echoing the title of the second edition of your book?
It's starting to, the latest numbers show there's been 6 months now of declines in prices. But, of course, in my book, I'm predicting a much bigger decline in price than what's happened so far. Although there are some suburbs in Toronto where they're getting up to the numbers of 20 or 30% in the higher-end housing. It's interesting, the monthly CREA number comes out and they decide to exclude the high-priced houses from the index because they thought it wasn't representative. And, of course, the high-priced ones are the ones that come down the most percentage-wise because they're harder to sell, right? So, anyway, they're always changing the benchmark, but in the end, it won't make any difference. The results are going to happen because interest rates have been rising, and people are looking now at 5.5%, even 6% mortgages. In the U.S., mortgages have hit 7% on the 30-year mortgage, so it changes the dynamic completely.
Wow. Well, Canadian mortgage rates less than that, but most Canadians, are they still taking out variable rate mortgages, hoping that the rates will come down?
I think some of them are. I was talking to a realtor because in Edmonton, I live in Edmonton. The prices never got as bubbly as Toronto or Vancouver, but they have gone up a lot. And now there's a lot of houses for sale in the high end, the higher priced part of the market. And so I ran into a realtor and acquaintance that I know, and I said, "Are they starting to reduce their prices? Because they're just sitting on the market; they're not selling." And he said, "No, they haven't really done that yet." And then he said, but it's a good time to buy because the variable rate mortgages, the interest rates will be coming down soon. So I said, oh, okay. That's a new twist for me. But realtors, of course, they have to come up with a story that makes it a good time to buy. But really, it doesn't. The cost of the mortgage is one thing, but if that $900,000 home is going to be $700,000 6 months from now, waiting 6 months is a small price to pay to get a $200,000 discount.
Right, and for the state of real estate in Vancouver, a good friend who's a realtor, 2 months ago even, trying to find 10 minutes to just go out for a coffee, impossible. He's now, sales are so slow, he's painting houses.
Well, it's interesting talking about realtors because they are, in my experience, talking to a lot of them, they are often investors in houses themselves. They find them. Maybe they see one, they can't sell it, so they buy it themselves. Nobody else wants to buy it. It's a kind of maybe a tear down that nobody wants, and then they rent it out and they become a landlord. So they've got a double whammy. They've got no income because no houses are trading on the commission side, and then they're struggling a bit on their investment side too. And they're hit with higher interest rates. So I don't think anybody's going to feel too much sympathy for them, but they've had a great run. But some of them are going to be struggling a little bit. The only good news in that scenario is rents are starting to rise quite rapidly. So maybe that'll help some of the landlords get more rent in the door.
How long, though, are those rents sustainable? Because Meta, whose Facebook today announced a hiring freeze and they're reassigning staff. Other high-tech companies, some laying off up to 20% of their staff. So the high-tech, which is a high-income industry for the most part, except for those rookie code monkeys who do all the hard work on those websites, they got paid next to nothing anyway. But so even going into high-tech now is not what it was again 6 months ago.
Yeah, I mean that sort of leads into the monetary policy. So the inflation numbers Germany just came out and it was over 10%, which is shocking. It's the highest since 1951. And of course, some of that is the cost of natural gas and that sort of thing. But Germany's known for being very careful about not letting inflation get out of control. And of course, the U.S. is around 8, and Canada's around 7, and the United Kingdom is close to 10 as well. So the central banks everywhere are trying to rein in inflation, and the way they're doing that is by raising interest rates and cutting back on quantitative easing, which is the intent is to reduce the amount of money in the system and to curtail demand, which, to lower demand, lower inflation is the equation. And that basically means they're trying to slow the economy down. So we're probably, if we're not in a recession, we're probably headed for a recession. Some well-known pundits like David Rosenberg and others are saying we're probably already in a recession. So in a recession, of course, it's going to be harder to find a job, and people that are counting on income to support an investment in housing where it's losing money every month, which I ran in, the last 7 years I've been involved, I've run into dozens and dozens of people that are doing that. It's going to be harder for them because they aren't making it up. When their mortgage renews, a lot of them will have variable rate mortgages, so it's going to, the pain is going to be felt right away. And they won't have their job to subsidize that monthly shortfall.
Hilliard, when the mortgage stress test first came out in Canada, everybody laughed at it. Are they still laughing at it now?
Well, it didn't work. It's like the stress test wasn't stringent enough. The way they got around the stress test was by using variable rate mortgages, and I don't know. And there were so many exemptions. Like I had one client that was a high net worth exemption. I don't know how many exemptions there were, but in any case, obviously it wasn't stringent enough because at least it doesn't appear to me. The lenders, the big banks, they publicly are still maintaining that they were very careful in the underwriting, but I just don't see how that's possible because the amount of debt in the system is so high that we know that a significant number of Canadians are stretched beyond their limit.
And is there also kind of off-book debt expenses, like you have a daughter in college, a son who's maybe an intern somewhere and getting minimum wage to do it, so you're kind of subsidizing them? That never gets written into your mortgage proposal, does it?
No, like daycare costs and childcare costs. They're not for anybody with children. It's a significant number. Like it could be as much as $2,000 a month, and it's not part of the of that equation. So no, the stress test was I don't know, it wasn't stressful enough, I guess would be the way to put it. And so we there's that saying, I think it's Warren Buffett is credited with the saying is, it's not until the tide goes out that you find out who's swimming naked. And this is the stage we're at now. We're starting to, the tide is going out, and we're very close to starting to see who was swimming naked, who was sort of stretched beyond the limit, and they could stay alive for a long time because interest rates were close to zero and money was easy to get. And so as soon as you tighten money up and raise the cost of money a little bit, then you start. The other saying that they have is that the central banks will keep raising interest rates until something breaks. So that's what we're headed for, and I don't know what's going to break. And they had a crisis in the UK, in London this week, so there was something broke there. So maybe that's a sign of we're getting to that point now.
Well, the rookie prime minister and her finance minister brought in a mini budget where they gave massive tax cuts to the very rich and corporations after they'd been warned that's going to endanger your pension fund, and the Bank of England had to intervene to keep pension funds from collapsing, and yet the British government insists it's going to continue with these tax measures that are damaging to the economy.
Yeah, and what happened with the pension fund? So the interest rates. So the deal was the interest rates were 3.8%. They jumped to over 5%, and it turns out. Now I didn't know about this, so I'm assuming most people didn't know it because I work in the financial sector. But the pension plans had been buying bonds. I knew this part. This part I knew, and they've been buying bonds, long-term bonds at 1% and 2% interest rates. There was even one long-term bond at 0% interest that the pension plans bought. Austria was the issuing country, and then rates go up to 5% or something like that, and now they're in trouble. But it's worse than that, because what they were doing was to juice up their returns. They were using those bonds as collateral, and in a sophisticated hedging strategy, which I don't fully understand. I've read the description of it in several places. It's still kind of murky, but I'm guessing what they were trying to do is make their returns look better, and now they're caught, and so that's why the Bank of England had to step in and rescue them. And the way they rescued them was by buying these bonds and pushing the price up. So they as soon as they intervened, the yield on the bonds went to 5%, and they intervened to the point where they got the yield down below 4%, which was enough to help relieve the situation, at least temporarily. I don't know in the long run. I don't know if there is any relief for it, because 5 or 4% is still way below the 10% inflation rate that we've got. So there's an example of where nobody really knew that was going on. Although apparently it was known a bit in some of the more obscure financial circles. And then all you need to do is put rates up to 5% and find out it's a crisis.
We'll have more with Hilliard MacBeth right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Hilliard MacBeth. Hilliard, if the British pension system was running into trouble with things that their government was and wasn't doing, and hedge funds and so on, what about pension funds in Canada and the U.S.? I know a lot of American pension funds are known to be very shaky because more is being taken out than being put in or was ever put in. How are Canada's pension funds going to hold up, and are we going to face a similar crisis because there's been backroom dealing that we didn't know about?
I don't know. We don't know of anything like that in Canada, and so we don't know if they've been doing that. We did have a couple of issues in Alberta with AIMCO, the provincial government's pension management arm, and it turned out they were using derivatives, which, there was a couple of very large losses in the billions of dollars, and they fired the manager, and it's all about juicing up the returns, to make the thing look better. So they changed the management of AIMCO, and that's probably what will happen if it appears in some of the other pension plans as well. But it does tend to be something that, like a lot of things, anybody in a profession like that tends to follow what the other leaders are doing. But it was interesting with this thing in England because the budget came in, they cut taxes, so that meant they were going to have a budget shortfall, and the IMF this is very unusual. The IMF publicly rebuked the government for doing that. Then Mark Carney, who used to be the governor of the Bank of Canada and then after that was governor of the Bank of England, also stepped in and said it was irresponsible. So everybody kind of piled on to them. And of course, as soon as that happened, then the yields started to jump higher. So, I don't know. On the other side of that whole coin, though, is when you look at the inflation expectations as measured by what the market is acting is pricing in for expectations for inflation, they've come way down to 2% or even less than 2% in some cases. So the market is betting that inflation is going to rapidly come down, but I just don't see how that's going to happen. We're only at the beginning of the wage and price demands that we're going to see. We're going to see a lot of people asking for higher wages, and given that there's really a shortage of workers out there, they're probably going to get the demands met. They're going to get the wage increases they're asking for. So that's going to affect inflation higher. It's going to mean that the interest rates will stay high or perhaps even go higher than they already are. And it's also going to hurt profit margins on the stock market because we're having a pretty bad month in the stock market. The stocks now are back into bear market territory with a decline of about 20% in the S&P 500. And as we speak today, the market's down at over 2%. So it's people are starting to wake up to the fact that we're all going to have to live with higher interest rates and possibly higher costs as well. And that'll show up in the profit margins for corporations, and it'll show up in households if they're heavily indebted with big mortgages. Some Canadian families are.
One of the things the London Metal Exchange, the LME, is considering is a ban on Russian aluminum, and that is spiking prices. What's your opinion on that? Trying to limit the supply of something that's in just about everything.
Yeah, I don't know. This thing with Russia and banning the oil and banning, all it means is they end up selling it to somebody else. It's quite interesting. There was a mini crisis at the London Metal Exchange, which in the past has been sort of the main place where people trade these metals like copper, nickel, and aluminum. And but it's actually, I found out, I didn't realize this, but it's actually owned by the government of Hong Kong. So it's, I don't know. Who knows what's going on there? It's really, really murky right now, and we do know that putting a cap on I know there's a they don't want to ban Russian oil because the world needs oil, so they decide if people buy oil from Russia, there's a cap on what they can sell it. So if they get it as a big discount from Russia, then they can't resell it for a much higher price. So but all that kind of stuff doesn't really work that well because you can always make a private deal with another country. The sanctions are still on Iran, so there's 4 million barrels a day there that's being held off the market, and the Russians are not able to sell their oil easily. So it's you wonder sometimes if it isn't helping prop up the oil market. The U.S. has become one of the biggest producers in the world, if not the biggest producer. And they're actually an exporter, a big exporter of oil. I think I saw numbers as much as 8 million barrels equivalent per day being exported by the U.S. So they're one of the biggest beneficiaries of this crisis brought on by the war with Russia and Ukraine.
Now, something that's kind of interesting, you're one of the long-term Tesla owners in the world, I would think, by now, when you bought it. And now you're involved in a unique experiment. What is it and how's it working out?
So when you buy a Tesla, you can pay for the fully self-driving option, which is where the car does all the driving for you. You don't have to do anything. And it's obviously experimental. And so I signed up for that. And then you apply, and then you get in Canada, they didn't have any people on the list to get approval to try it out. But a couple of weeks ago, I got approval along with some other Canadians. And so I tried it. I tried it on a long trip I was going to visit a client outside of Calgary. And on the highway, it's relatively easy, and it worked really well. I had to recharge. There's a charger just north of Calgary, and I had to take the exit off the highway and drive to where the chargers are in the shopping center parking lot, and it took me all the way into the parking lot. Then it got almost to the charger, and then I took over because it was in the middle of a parking lot. I got a little nervous, so that was pretty cool. But in the city, it's a trickier thing, especially if there's construction zones and that sort of thing. So I finally got up the nerve to try it from my home. It's about a 20-minute drive to downtown Edmonton, and it took me the whole way there the other day, about 3 days ago, without any interventions. And but it is a little hairy. There's one, so coming out of a quiet residential area, I have to turn onto a busy street, 4-lane road, and it's sort of, you're kind of holding your breath. It's kind of nerve-wracking because it sort of edges forward, and it watches for an opening, and then when it gets one, it just goes. Right? It goes quite quickly, which is fine if you're doing it yourself. But when the car's doing it, it's kind of. So anyway, I haven't tried it with any passengers yet. I don't think they would go for it very, very well. It's not very comfortable. So, I mean, right now it's rough, and you have to be ready to take over at any moment. And, there's a few glitches. I'm really not confident enough to try it in a traffic circle, as we call them here, or a roundabout, as they're sometimes called. I've done the one where you go a quarter of the way around, but I haven't done the one where you go 3/4 of the way around. Merge lanes are tricky. Crosswalks are great. It stops really well if there's any pedestrians. Sometimes it stops even when there's no pedestrians. But one time it didn't start up again after the pedestrians had finished crossing. It just sat there, so I had to intervene and tell it to go. So, but it's early days. I mean, 10 years from now, it'll be the norm, I'm sure. And, it'll maybe even 5 years from now. And, it's just, going to be amazing, really, for people, if they allow, when they finally get to the point where you can summon the car from across town, a lot of 2-car families can shrink down to 1 car or 0 cars if you just subscribe to a service where you just call the car up on your phone and it appears, and then you just jump in and away you go.
Yeah, and people think, well, how good are robots? Vancouver's SkyTrain system went into operation in 1986. It hasn't had any accidents. No trains run into other trains. The only accidents with the trains have happened in the switchyard where they're under human control.
There's no human driver on that train? I didn't know that.
That's usually some 5-year-old kid sitting in the front seat. Or me, because I love the view.
Oh, really? Yeah, I didn't know that. It's, the next step is airplanes. Obviously the airplanes for a long time now, I know, have been able to take off and land themselves. But people feel more comfortable if there's pilots up there and ready to take over. But at some point, maybe we'll get used to it. Or maybe we won't get used to it, but humans 100 years from now will be able to handle it, or 50 years from now will be able to handle it. Other humans that grew up more willing to trust the robots.
Well, SkyTrain's default is if there's any kind of problem, it just stops, and there's been famous cases where it's been stopped on the tracks for hours, and finally people get tired of being trapped and start walking along the tracks, which again just takes it longer to get the system running again.
Well, this is the next step in the Tesla fully self-driving, is they would have operators. Tesla would have operators monitoring all of the cars, and then if one car stops and won't move again, the operator will immediately go and try and figure out what's going on and help sort out the problem.
Well, the tractor-trailer robots being tested in Nevada, you have a train of about 12 trucks that are all computerized, but the last one has a driver in it. So if there's any problems like a flat tire or whatever, that driver can get out and fix it. But they all go together as one big unit, which is much more aerodynamically efficient.
Yeah, and I think about the space that they take up on the highway. When you've got those big trucks on the highway now, there's a big space between them, and nobody wants to drive in that space because it's uncomfortable. So they take up way too much space. And that, with the robots, they can be nose to tail. They don't need hardly any, maybe just a few meters of distance between them and the next one. And they can go in a long train, just like you say. And that makes so much sense.
Hilliard, anything else we should be keeping a close eye on apart from self-driving vehicles?
Yeah, there's a lot happening in the world, and tomorrow is Tesla Robot Day, so you'll see a presentation tomorrow by Elon Musk with the new robot that Tesla is designing.
Oh boy, something else to take my job. Terrific. Hilliard, thank you so much for chatting with us.
Thank you, Jim.
My guest has been Hilliard MacBeth, author of the second edition of the book, When the Bubble Burst, Surviving the Canadian Real Estate Crash. His website, MacBethMcLeodPartners.com. Find him on Twitter at HMacBE. If you have any questions for Hilliard or any of our other guests, you can send them to info@HowStreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.